Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, April 5th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The last session we had a pretty significant rally. Price failed to hold below the previous session's low, and that led to a major fill of the RTH gap and then a continuation into the close. That was a pretty significant day. We really shifted our bias right ahead of the RTH open, where we were looking for a gap fill when prices started to push a little higher off those lows, and after forming an absorption signature off that low, basically on the intraday time frame. However, the entire downtrending behavior is still intact, really, until 69.25 is taken out, or really even if 27.03 is taken out. That's the midpoint of the zone. So really right now we're still at the center of this range. Not a whole lot of great edge here. The best buy is still somewhere down here, and we could still see that area tested ahead. Right now we really, even though yesterday was a significant rally, we've gone really nowhere for about 2 weeks. We've gone mostly sideways, down over a 3 to 4 week span. And now we're retesting moving averages from below after they had been mostly mixed. That's usually a bearish outcome. So I don't want to get too bullish here and think that this right here is an opportunity to go higher. I think that would have been the case if this candle would have formed somewhere down here after rejecting recent lows. So I would be cautious with being too aggressively long in here. This is not the best trade location for the most part if you're long. If this is to go higher, I would say let price come back and do a shakeout before it goes higher. Something like maybe this day here where you have a failed new low and it goes higher. Or perhaps this day right here where it drops, failed new low, and it goes higher. Let it come back a little bit, because right now it appears bears are going to want to defend 69s. That could lead to a push right back against this range over the next few days. Alright, taking a look here at the NQ. Very similar behavior here overall. We're testing basically the midpoint of the range, 66.53. You've heard me say that quite a bit ever since on the intraday time frame here in the trading room. We were looking for a bounce back to the mid of this impulse sell-off. So on that day we were already calling for 66.53. This day was the same thing. We were looking to here as it defended. The failure to hold here in 7K suggested 66.53, and now we're seeing it in play again. So that's such a significant level, really kind of home base within this trading range. At the moment, we've moved downward. Again, we did not reject this low. We did not retest it, and we came just shy of it and already back to this mid. So again, it's that mid that's going to really decide whether we continue higher, or if this thing's going to retry these lows and actually get into that 61.50. That's going to be the major level to test. This is the best zone on the board here to look for a defense opportunity. Right now, being already back at the midpoint, that's usually a first level target, and it's already there now. So I would be cautious again if you're looking to be long, and I would instead look for some sort of pullback shakeout leg to get in if that were going to be the case. Alright, let's take a look now at crude oil. Crude oil is very interesting right now. It looks like it could be very actionable for a high probability long opportunity. So basically we have this very nice key range. We've got the key range mid here. That is exactly where we hit. Remember, we had that downside target starting on this day when we had the failed new high. I mentioned we could hit 62.18. Well, we did. We hit the 62.16. Hit it, went 2 ticks below it, and then by the end of the day closed back near 63.70. Now we have a nice little rejection here that's developed right at that midpoint. We have an uptrending market for the most part. We have kind of an ascending pattern. Here's your midpoint right there. That's the key midpoint that you're going to want to watch, because if price can hold that midpoint, which is 62.85, and in here the 2-day lows basically 62.80, that's your zone that bulls want to defend. That's the ideal entry trigger for a long opportunity that could take you right back toward 66.29 at the very least. That's a high probability trade. with a shot at actually seeing much more strength beyond that. So this morning, the idea is to watch 62.85. Holding that zone would be the best opportunity for a short-term swing buy opportunity back towards 66, 67, and that could play out over the course of the next 3 to 5, 5 to 7 days up to that target. So we'll keep an eye. Now keep in mind, if price were to close below that level today, all bets are off. So this is the most important level on the board right now. We'll continue to watch how that develops. Above 64 will really open this up and squeeze it up. All right, taking a look at gold now. You'll see that gold has been in a very clear trading range this entire time. For the most part, gold has continued to trade back and forth in this range, and looks like it could be due for expansion soon. The only problem is we're right at the center of the range at the moment, right there, and we're not really showing a whole lot of edge in this zone at this time. Now overall, we've just come from rejecting this high, so I think generally speaking we're flowing back toward the low part of this range, but I think at some point here we're going to see major expansion. Anytime you're in that 30 zone, 30 to 40 here in this range, it's been nothing but chop. So I would avoid this area and be patient for the edges. That could be a spot to fade back to the 1330s, and eventually we'll see a breakout from this range. A breakout from this range could spark a move of about 60 points. That's what we're going to be looking for down the road. All right, taking a look lastly at Bitcoin. Here's a look at Bitcoin. We've been trending lower ever since this contract's been on board. You can see here we've also had downtrending PIMAs. This is the high intensity trigger zone, defended and dropped, could not get back above 9K. And here we are testing prices at around 6,700, which is the 50% expansion target from the impulse range. That is the zone where we rejected last time. That was basically our target here. And then once we rejected it on this day, we were looking for a bounce back toward 12. You see it? Well, this is what I'm talking about again. This type of trade could happen again, but it has to happen after a significant event like this. We haven't found that event just yet, so we have to continue to be patient. We need a flush. We need a big flush event. We need to take out some of those stops, and then we need a fantastic reversal back up. That would give us a failed new low. That would also give us the potential to bounce back toward 11.5 to 12K, very similar to this trade right there. So we're looking for that again. Right now, got to be patient. This thing continues to trend lower. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.